Thanks for joining us here on a Monday. I'm Marlin Bohling with you, along with our very special on-set guest. Mr. Chris Swift is with us from Swift Trading in Nashville. Thank you, sir,
Thank you, Marlin. Good morning.
Joining us again. Happy Monday to you.
Thank you, sir. Doing great, sir.
All right. I understand you were kind of on the road last week.
I was. I ended up in Belfast, South Dakota this past week.
And that was cattle related, right?
Yes, absolutely. Okay. A bunch of them.
Can't wait to hear from that, and we'll talk about that in just a second when we get to our livestock segment here. All right, what I want to do is I want to take a look here at our grain trade and see how we're starting out today and get your thoughts on this, kind of a weaker start. So let's go ahead and go to the big board here and see just how things are trading. Let's start with the corn market. Right now on the corn, we have December. It was about $0.015 lower here, Chris, when we first checked it, and now it has come back to unchanged, and now down 1/4 cent. So just not moving much at all. July down 1/2 at 3.70 3/4. On the soybean trade right now, on the January contract, we're down 5 3/4 at 9.84 3/4, and July down 5 3/4 at 10.13 3/4 per bushel. Wheat market right now on Chicago wheat, we have December down 6 3/4, so there it goes again, 4.20 per bushel right now. On the Kansas City market here, we have December now trading at 4.15 1/4. That's a new low for the move today, at least for today's move anyway, down 6 3/4. And if you look at Minneapolis wheat, we have the December contract down a nickel there at 6.30. And in the cotton market right now, we have that December contract 22 points higher, right at 70 cents even per pound. All right, Chris, let's take a look at these and pick them apart one by one here.
Okay.
Corn about steady, a little weakness in the beans and in the wheat. Harvest numbers were basically done on soybeans. We'll get an update on corn this afternoon from USDA. What's going to move the market now?
You know, a lot of it is just waiting for the end of the year. I believe that a lot of the selling that took place last week was primarily just to raise cash for the holidays. And then we had a great rally on Friday. And probably with the new contract lows in the corn, that just set up the situation where at this price, it still has intrinsic value to it. With the ethanol production and livestock numbers that we have on feed, we're going to continue to use corn, and it is probably right at some intrinsic value.
All right. We've had a lot of talk about all the corn on the ground all across the Midwest and out in the plains yet. It's going to take a while to get that all cleaned up out there.
Yes, that's true.
It's going to be hard to see elevator bids move up very much for a while.
And they probably won't. Just because they don't go up doesn't mean they'll stop. You know, they stop going down doesn't necessarily mean they'll go right back up again. But we could level off here until the first of the year. First of the year, we'll have some new export sales to come in and start moving some of that product down. We can hope that we don't have any river problems and flooding or anything to inhibit that. But I think right now everything looks pretty good, set up for the first of the year to keep moving grain across the seas.
So cotton is at 70 cents right now. Are you surprised to see it up that high?
No, not really. They've had some trouble down there with the cotton crop. It's not as good as what they thought it was going to be, and so it's been able to stay firm here for the last couple of weeks after that sell-off that we had earlier.
Even with the big drought.
Even with the big drought, yeah.
Now on the wheat, we're seeing a lot of weakness in this wheat trade right now, down about 6 cents or so. And my colleague John Jenkinson was back home in Kansas over the weekend, and he said, boy, that wheat looks really tough.
Yeah, it
really
does. And I'm not real sure. I think we just have so much burdensome stocks that every time the wheat market pokes its head up just a little bit, there's somebody there as a willing seller to it. And a lot of wheat farmers need to move that wheat out of there and get some capital raised up. And if they start planting spring wheat a little bit later on, then they're going to want that revenue in for that. But right now, it's just a burdensome market with a lot of supplies.
All right, I want to bring you back, and I want to find out about your trip to South Dakota last week. And it all ties together with our cattle markets as well. So anyway, we're going to be back in just a moment. We'll talk more with Chris Swift of Swift Trading when we come back after this. All right, we're back with you, and we're talking with Chris Swift of Swift Trading Incorporated. He is based right here in Nashville, and he stops by the studio to visit with us. Chris, one thing before we get into our cattle trade here, the Dow is up this morning.
It is.
We had a look a little bit ago. It was up maybe 70 points or so. I believe we can take a live look in here and see what it's doing right now. But what's at work in the financial market this morning?
Ask that again now.
What's driving the Dow and the
I'm not real
financials
sure.
this morning?
I don't really know of anything particular. Probably just nothing bad happened. We have a lot of issues out there with North Korea and some of the other issues that we've got. Always keeps everybody on edge, and I think just nothing bad happens.
That may be one of my favorite comments ever. Well, nothing bad happened. All right. Well, 75 points higher on the Dow at 23,432. Dollar value, we can take a look at that too before we get into our cattle talk. And on the dollar index right now, we have the futures on December now quoted 290 points higher at 93.860. So there you have that. All right, Chris, tell me about this trip. You went to South Dakota.
Went to Belfouche, South Dakota.
Okay.
Talked to some producers up there. It was a great time up there. Got to see a calf sale while I was up there, and a lot of black cattle moving from around that area. And what they're doing is they're sending a lot of cattle south to inhibit from the drought. They want to be able to just keep that core cow herd as they can, because feed is awfully expensive up there hauling hay into that area. So noticed a little bit of an elevation of the calf market sales there, trying to get them moved south into a little bit better feeding prospect area. And then we saw the cattle on feed report that came out on Friday, and we noticed a lot of light cattle moved into the feed. And so that could be some of the reasons. Some of the drought backgrounders in that drought area wanted to move cattle early, and I believe that's one of the reasons why the market is not down near as hard this morning, is because a lot of those cattle placed were very light.
So you think they're front loading them, bringing them forward sooner than they would
Yes,
have?
absolutely.
Just because of the drought conditions up there.
And raising money. The price is still relatively good compared to the summer lows. So anything bought in that summer low, now that the prices are elevated, that's bringing a pretty good amount for the holiday season, just before the holiday season.
How much lighter do you think they were than normal?
Probably 50 to 60 pounds, it looks like. So probably another 30 days on feed to gain that back.
Interesting. All right. And short hay supplies up in the Dakotas, that's for sure.
That's for sure.
Well, let's go ahead and take a look at our futures on live cattle here first, and we'll go ahead and take a look here. Right now, live cattle, December, down 85 cents at 118 even per hundredweight. Now February is down $1.08 at 123.60. Now it had been about a $0.50 weaker, and analysts were kind of impressed with the way it opened up. Now it's starting to sag a little bit now that we've been trading for almost an hour. On the feeder cattle side, right now on the feeders, you have your January contract down $1.07 at 150.65, and it's just 2 ticks from our low of the day now. March down $1.17. Last trade 148.95. Let's switch over to the lean hogs too. On the lean hog market this morning, December up $1.35 at $62. February up 72 at 67.80 per hundredweight. Now that's only a dime from its high of the day, Chris. Are you a believer in the lean hog market right now? Or
well,
not?
it's kind of found some level playing grounds there. It's got the basis narrowed down with the lean hog index, so there's not going to be a lot of movement in that December contract with those two close together. But the pork market and the beef market continues to move because there is good discretionary spending out there from the consumer, and we see our economy continue to increase just a little bit. So with those factors, the consumer out there can still enjoy a lot of protein in their diets.
All right. Well, very good stuff. Thanks for coming in
Absolutely,
and sharing
sir.
with
Thank
our
you.
audience today. I appreciate that very much.
Right.
Chris Swift, he is with Swift Trading Incorporated, and he's based right here in Nashville. Look him up, and he'll help you with your marketing plan, too. So, Christina, with that, I will turn the reins over to you.
All right. Thanks, guys. Appreciate that.